Hello everybody, welcome to another episode of Erickson TV. Curtis here with Casey. This is Casey McKinlock, and I'd like you to introduce and tell us a little bit about yourself.
Sure thing. Well, hey everyone, happy to be here. My name is Casey. I grew up in the greater Seattle area. I'm here as the tax guy for the new season, so I'm excited to work with all of you. And actually we got a nice little Christmas gift. So there's going to be a couple new extenders that got passed. One of them is going to be the 179 depreciation as well as bonus depreciation. For all you business owners, that's huge. The rule went up from $25,000 to $500,000 for your depreciation.
So that means that you can actually buy up to $500,000 of assets before December 31st, which is about a week away.
Yep.
And then you can write it off immediately.
Definitely.
That's a good present.
Yeah. Merry Christmas.
And then what's the other one that was extended?
We had that one, the bonus depreciation as well. If 179 doesn't work for you, or if you want to go into a net operating loss, you can take 50% of that depreciation.
And what happens to the other 50%?
The other 50% we could do in a later year as well.
Carry it over. Okay. Okay, those are great gifts for business.
Yeah.
And as part of this tax extension policy law that was just passed by Congress and the Senate, and the President signed it, is there are some extensions for personal tax strategies that were ended at the end of 2013. Now these have been extended into 2014. One of them is the sales tax deduction. That was a big one. So people here in Washington State, if you have been paying, everybody's been paying sales tax, you still get that standard sales tax deduction. But also if you paid sales tax on home improvements or purchase of some type of vehicle, that could qualify as an additional deduction. Now, unfortunately, it looks like that's going to end at the end of this 2014. So just make sure that you keep track of some of your big ticket item sales tax receipts. And then some other nice little rule changes for 2014. Actually going into 2015 now. I'm kind of jumping ahead here. The standard mileage rate for business is bumped up for 2015 to 57.5 cents per mile. That's an increase of 1.5 cents. Interestingly enough, the medical mileage deduction went down by ½ cent, which doesn't make sense to me, but whatever. And charity, 14 cents a mile, stayed the same. For people that do 401k plans or 403b or 457 retirement plans, your cap has now been increased to $18,000 that you can take as an elective deferral for a tax deduction through your 401k plan. And if you're age 50 or over, you get a $6,000 catch-up provision, so now it's at $24,000, which is great, great deduction. Last rule I want to talk about is a restriction on IRA rollovers. Basically, you can only do one IRA rollover every 12 months. However, that's if you take the money out and then put it back within 60 days. Okay. If you do a direct custodian to custodian IRA, you can do that unlimited. So, for instance, if you want to come to us as your investment advisor, you can still do that custodian direct. And then just to take this away, if you have any tax planning questions about how any of these laws or any older laws affect you personally, and you want to know before December 31st, please feel free to contact Casey or myself or Lauren, who's usually in her videos, and we can help you to see how it applies to you. I want to wish everybody a Happy New Year, and thank you very much, and welcome aboard, Casey. All right, bye now.
Bye.